The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Daryl Martin. Now, Daryl Martin.
All right, folks, welcome back to the Diagnostic Trading Hour here. Daryl Martin, happy Monday, and we're going to have a little bit of an interesting week, probably a little bit lighter volume than last week, and so that, of course, make for a choppy week. Let's go ahead and take a quick look at the market, where everything's at right now. We got the S&P just inching up a little bit, 6 points right there. We got the Russell up 8.4. We got the NASDAQ up 28.25, and the Dow only up 65. Oil is actually up 63 cents, with natural gas down 0.014. Euro dollar edging up a little bit, up 20 pips. Pound dollar is down 19 pips. And if we look over at corn and soybeans, corn having a little bit of pullback, $2 right there at the highs. And then we got the soybeans actually down quite a bit, 35.50 down for the day. So South America had a decent soybean crop, and so there's going to be a lot of imports from that. That's going to help alleviate some of the concerns with the soybeans. And corn, of course, that's going to continue to be the issue. We're going to see how, any rain falls over the next couple of weeks. It'll be crucial to see if they get any or enough to actually make an impact on the 70% of the corn crops that are in danger. So just keep an eye on those markets and see how you can take advantage of them. And so, we want to talk about several things today. Always looking at the diagnostic trading, and one of the big areas is the fundamentals. And just want to go over some of the things on the upcoming fiscal cliff that everybody keeps talking about. Make sure you understand the importance of that and what's going on. Not only do we have, them with the debt ceiling, raising the debate there, that's going to happen around September, where they have to do some action to make that happen. But also, of course, the big automatic spending cuts that they all agreed to, and the tax extensions that they all agreed to if they don't come to an agreement. And a lot of people right now, a lot of the smart money is saying they think they may actually not be able to come to an agreement. So Democrats being afraid of losing control, and therefore just holding to the very end, trying to make the Republicans look bad if they can. And, of course, that's just not going to make anybody look good as the final reality of it all. But the tax is actually turned into like a $7 trillion tax increase. And so that's obviously going to be a pretty big impact on the market. And, yeah, they can go back and they can retroactively reinforce things if let's say the Republicans win the House, the Senate, the White House, all that. But, of course, it's still going to cause a lot of instability, and, we got to figure out sort of what we're going to do with that. And so, what you want to know is how is that going to impact you? So, of course, $55 billion will be cut automatically in 2013 from discretionary defense spending, and that's about a 10% cut to every program project that's not, explicitly exempt, like national, homeland security, things like that. In addition, there'll be about an 8% cut to other programs and activities that are non-defense for the domestic discretionary spending. And so that's just, obviously, that's money that's going to go out the door. That's not going to be spent anymore. That is going to impact jobs. On the income taxes, we're looking at, rise from, if someone's in the 10, they're going to go to 15%. If they're at 15, they're going to go up to 28%. So that group's going to feel it the most. Then if they're 25, they're looking at 31%. If they're 28, they're looking at 36%. And, then 33 and 35 could be looking at 39.6%. So, some pretty big up moves right there on, a large group of the population. Capital gains are going to go up from 15% up to 20%. And the qualified dividend rate rises on the top income tax rate up from 15%. So for, most filers that are out there. And that's really, obviously going to impact a lot of people. Even the child tax credit, that's going to drop from $1,000 down to $500 a child. So, we're having another kid this year, and I'm like, man, every single tax, refund is good, and they're looking at, cutting that in half. So a lot of the high-income households may not be able to take a lot of itemized deductions and a lot of personal exemptions that they were able to take, maybe not be able to take those. And the lesser hope value tax credit for college tuition will be reinstated, but several of the smaller education tax benefits will expire. And the earned income tax credit, that expansion for eligibility, that's going to also expire. The marriage penalty relief, that's going to expire. And basically that means a low or a middle income two earning couple will owe more to the IRS than they would if they were single, making the same income. So basically penalizing people for being married and making them pay more money to the IRS just because they're married. So pretty crazy. And then the estate tax will go back to the 2001 levels. So it'll fall back to anything over $1 million, up from where we're at $5 million. And it'll go up to 55% from 35%. So basically, they taxed them while they made the money, they taxed them while they spent the money on sales tax, and then they want to tax them when they're dead and take it away from their kids. And one of the biggest impacts on that is actually farmers when they pass land on, and basically kids aren't able to even pay the income tax, so they got to sell the farmland off. So just some pretty crazy stuff out there. The AMT patch, it won't be renewed, and that's the alternative minimum tax in 2012. So that will fall down to $33,750 for individuals and $45,000 for married couples. And it was at $50,000 for individuals. So again, if it falls from $50,000 down to $33,000, and it was at $78,000 for married couples, it's going to fall down to $45,000. So basically, they claim that that's been adjusted for inflation and whatever. So as a result, there's basically 30 million people that are going to be hit really hard with the so-called wealth tax. And basically, instead of 4 million, it'll go up to 30 million people. They'll be paying on the wealth tax. The payroll tax holiday, on Social Security, where they have that down at 4.2. So everybody who's living on Social Security benefits, their tax is going to go from 4.2 on the Social Security tax rate back up to 6.2% on the first 110,000 they make. Basically, what that means is somebody making 50 grand will pay another $1,000 in addition on their payroll taxes next year. So that's while you're working and you're not even living on your Social Security, basically you're going to pay another $1,000 just on your Social Security. So pretty crazy right there. The unemployment benefits, of course, that is going to expire out, and any workers who lose their jobs after July 1st will only receive 26 weeks in unemployment, down from as many as 99 weeks. So I don't know. That's a debatable topic right there. But the whole point is the stopgap, and you just need to make sure it's being managed correctly. And then tax extenders, a lot of the individual and business tax breaks will expire. And, there's really nothing out there. They have a little bill they have proposed, but nothing's looked to, actually make it past the House and the Senate yet. And the Medicare Medicare payments rates for physician services will be dropping by 27%. So doctors basically receiving 27% less money from Medicare, which of course means less of them will be taking it. And that also means that there's a lot of them that are threatening right now. I mean, it's a huge percentage. I've seen quotes from 10% up to 30% of doctors looking at retiring or even just quitting the medical field altogether just because they can't keep up between the lower Medicare payments and the increased cost of regulation and the increased malpractice insurance. About half of what you pay when you go to a doctor or get any kind of medication is literally malpractice lawsuit insurance. So you're paying for that, and that's, if you want to cut the tax rate, limit those suits, and instantly you'll cut the tax rate. But they don't seem to quite want to, everybody doesn't seem to agree on that one. So there's basically a whole new, it's a surtax on high-income households that the Democrats are pushing for. And unlike any other fiscal cliff provisions we've had, this new tax was not really written into law. So it's included just to reflect a magnitude of tax increases that all go into effect at the exact same time by taking away all these tax benefits they've been putting into place. And it is a little ironic considering the Democrats, when they controlled everything, did vote to extend it. And now they're fighting to not extend it unless, a certain group, people making more than $250,000, pay more. And but at the same time, those are the people that are paying for jobs, and they want to say, oh, I don't believe in top-down economics and all that. Well, here's the bottom line. If somebody's making $250,000 and all of a sudden they got to pay more money to the government, they have less money to pay workers. So they got to basically lay them off. And, unless all of a sudden they're going to make another $50,000 to keep that one person on. And, they can just as easily have a few other people work harder. So it is going to lead to more unemployment. And, just be aware that all these things that are going on and some of the things that can really, affect you as a trader, like I said, all the capital gains, everything going up. And, don't be afraid. Call your congressman, call your senator, call your representative. And, if they're Republican, tell them make sure they're voting the way that to get this thing done. If they're Democrat, call them and say, quit playing games, and, y'all figure it out in a year, but, don't be waiting to the last minute to figure it out and fight it because you want an election to be won. And that's just, my 2 cents, but I definitely would urge you to call them and get it done. It doesn't help the market, doesn't help the economy. Congress really basically is in the way of the economy. And another interesting thing, Romney came out and he actually said that he does not think we should do any more stimulus or any more spending. He said basically it didn't work. In reality, we just took out a lot of debt. We still have an unemployment rate above 8%, and we have a ton of money out there that, if released into the market, could cause a massive, inflation issue. So that's sort of the stance that he is actually now taking publicly. And, whatever side you want to be on, that's fine. But at the end of the day, has the government really done a great job with your money? And so do you want to be giving them more of it? And, I pretty much answer that for myself, and I, consider what you may be able to answer that yourself. But, right now, back to the markets. That's the fundamentals. We do have a few things going on this week, like I said, in news announcements. A little bit lighter volume we probably should expect. The big news coming up, of course, this month is going to be the big Jackson Hole Conference. And everybody's going to be listening in to Bernanke to see if he gives any possible information on whether or not, he's going to even, clue into some QE in September. A lot of people think that's possible, but you know what? I mean, that doesn't mean a whole lot. So you just really want to, be ready for any possibilities. Of course, we've got, Bernanke speaking today. And, what he's done, he'll be speaking again tomorrow. And there's also going to be, so we've got a few other things. We've got the, some preliminary reports like the non-farm productivity and, labor cost will come out. That'll be a small, medium impact announcement, 7:30 on Wednesday. And you got your usual crude inventory reports. The big reports this week are going to be the trade balance, of course, and the unemployment claims. Those are both at 7:30 Central on Thursday. And we'll have our 10-year bond auction on Wednesday. We'll have our 30-year bond auction on Thursday for the U.S., and China will have a big number coming out this week, so that's something you're going to keep your eye on. Is they're going to be putting out some pretty big numbers, so that could impact the markets overnight and overnight trading. So always just keep it with your news and check out and see what's going on there, because it doesn't matter how good of a trend you got, it doesn't matter what your and now basically what your indicators say. You got to follow the charts. Where are they going? And the news is sort of, I compare it to a bus, okay? You can go in, you can get a great, perfect, healthy checkup. Your system can have everything lined up with the stars and everything. But when the news comes out, it's like saying, your doctor saying, you know what, your heart is perfectly healthy. And you walk out, you don't look both ways before you cross the street, and then the news, bam, the bus hits you, and you're dead in 5 seconds. So make sure you definitely do look both ways before you cross the street. See what news announcements are coming out that will impact you, not just with, if you're trading stocks, don't just look at the stocks. Look at the indices, look at the currencies, and look at the government news announcements that are coming out to see, things that could just impact the market as a whole. Stay right there, folks. We'll come back, and we'll dive a little deeper into some Nadex contracts and some possible plays for the week.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hello, folks. Welcome back to the Diagnostic Trading Hour here with Daryl Martin. And give us a quick market wrap. Looks like the markets haven't moved too much. You got the S&P up 6, you got the Russell up 8.4, you got the NASDAQ up 29, and you got the Dow up 70. So just really oscillating right there and not a whole lot going on. If we take a look over at corn, we can see, just sort of how it's been reacting. And I'll pull that up right now. And so you can see that. And then, we'll see if we can get that fixed over there. And right here, what you can see is, basically corn looking pretty flat, but it actually gapped down, basically early on Sunday. And had a pretty big up move there last Friday. So really, everybody's just waiting to see, and that's really what's going on with corn, is it is in a wait-and-see mode to see what happens with the markets, basically, in pertaining to the drought. And is it going to rain? Is it not going to rain? And is it going to rain enough? And if it does not, literally just in the next couple weeks, then corn is just going to take off. If they start getting just a ton of rain, and it comes in and really starts taking care of some things, then then corn's going to fall quite a bit. Soybeans will definitely just really start heading down. And so just keep your eyes on those markets. And if you like to trade them, or if you're interested in trading them, you're like, I've never traded corn, I've never traded soybeans, but I'd like to get into that. Then one of the things that you could check out is you can go over to Nadex. And if you don't have a Nadex account, Nadex is an exchange. It's in Chicago. It's registered with the CFTC. It's fully regulated. And again, it's an exchange. And they have what's called spreads and binaries. And I call them box spreads, but box spreads and binaries. And with that, you may have heard of binaries. There's a lot of binary companies out there. But be really careful. Basically, everybody but Nadex is it's over the counter. You're dealing with that person directly versus an exchange will let you be anonymous, okay? And an exchange protection in a lot of ways, but one of the ways is letting you be anonymous. So the other side of the trade, whether it be a market maker, whether it be another trader, they don't know what you're doing. They don't know if you're getting in or if you're getting out. They don't know if you're winning or if you're losing. But if you're trading over the counter, often they do know because it's the other side. And it's basically like walking into a casino and having that little, members perks card where they can track all your stats. And they can look at where the majority of people are. And, if they want to manipulate, they can manipulate. And what are you going to do about it? They're outside the U.S., et cetera, et cetera. So just be real careful with that. But, again, love Nadex. If you don't have a Nadex account, check it out. Hop over to tfnn.com. And over here on the right side of the page, you'll see a Nadex banner. Click on that Nadex banner, and you can sign up for an account. Just click Create Account. And there's basically two ways. You can get a demo account, you get a live account. I suggest you get both. With the live account, then you can see several things on them. And with the live account, it's only a $100 deposit to be able to open the account. And basically that's money, and you can actually start day trading with a $100 deposit. With a demo account, then you're able to open it right away. Literally in 15 seconds, you can have an account, enter username, first name, last name, phone, email address, hit apply for demo, and you're able to get in there and actually trade. And basically just trade alongside like you're trading right now, but now you can demo it. So it's the best way to learn. It's the cheapest way to learn is always through a demo account. Just learn the buttons on the platform, learn how the products work, and just start comparing them side by side to how you trade right now. Looks like we have a caller. We got Paul from New York. You there, Paul?
Yes. Hi. How was your weekend?
Hey, had a great weekend. How'd your weekend go?
It was great. Daryl, could you explain on the S&P 500 in the box on the bull spread on that, how do you determine the profit or the returns depending on where that closes in that range? I mean, if it closes anywhere in the box, how would I determine the return?
Okay, what you're going to do is basically how much did you make if you close at any given price? You want to know what your profit would be? Is that right?
Yes.
Okay, so if I go over to the indices bull spreads, and I don't know if we can get that message off of there that's popping up there. But if we go to indices bull spreads, US 500, and I'll just pull one of them up for an example here. And let's see here. We'll pull this one up. All right. So on this one, we go in and it says risk is 28, profit potential is 272. With that, what I got to do is look at what price did I buy the spread? So I bought it at, let's say, 1397.8. Okay. And then let's say the market goes up to 1405. All right, let's say that's where you close out at. So you do 1405 minus 1397.8, and basically that means you made 7.2 points. All right, and what I like to do is a lot of times I'll get rid of the decimal place, but you want to make sure there's only one decimal place when you do that. So we're just divided by 0.1, and the reason I divide by 0.1 is notice how it ticks in 0.1.
I apologize, Daryl. Could you expand your screen a little bit because it seems like it's a little small. It's hard to read.
Yeah, I can zoom in there a little bit for you. I don't know if you'll be able to. I can't zoom in the calculator, but let's see here. I'll bring that on and let's see it. Hold on right there. When we come back, I'll go over the details step by step. It's actually really simple, and I'll walk you through the exact formula to know what your profit will be if it hits a certain price level. Okay?
Thank you very much.
All right, hold on right there, and we'll get back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, this is Daryl Martin, and Paul, are you there?
Yes, I'm here. Yes, I apologize. Sometimes your screen gets miniaturized, and as very technical as it is, if you can't read it, it kind of is more confusing. But I do apologize if you expanded that. I had another question. I had to reboot my computer quite often. If I run your Nadex platform with Thinkorswim both together, they seem to interfere with each other, and neither one of them works. Any suggestions how to solve that?
Well, Nadex platform isn't mine. But, so what's the issue you're having? Like you're having to reboot a lot if you do what now?
If I run the charts that you use for Thinkorswim and Nadex together on the same computer, I mean, I have two different computers, but if I run them on the same one, they interfere with each other. The data feeds or somehow the feeds that they use seem to interfere with each other, and they basically freeze up each other.
That might be a resource issue. If you want to email me, I can send you some tips on computers. dmartin@tfnn.com. But I run NinjaTrader, TradeStation, Thinkorswim, the Nadex platform. I run all these things at the exact same time without getting a freeze.
Okay,
so
you've got a turbocharged unit, I guess.
Yeah, I do have one. So they're not actually that expensive in comparison to other computers out there. But yeah, send me an email and I'll reply back to you and we'll see what we can do to help you out. Okay?
Okay, thanks.
Going back to your question on basically how do you calculate your profit and loss?
Yeah.
What I do is I go in and you basically look at how it ticks. So the S&P 500, the US 500 spreads, they tick in 0.1, so 0.4, 0.5, 0.6, 0.7, right?
Right.
So if you're buying it, then what you want to do is, you're trying to figure out what your profit would be if you exited at a certain price. So let's say you got out at, to say, $14.05, all right? And let's say you bought at $13.97.8. Then what you want to do is you want to go, okay, $14.05 minus $13.97.8. That's 7.2, all right? Well, it ticks in 0.1. So now take that 7.2, that difference between $14.05 and $13.97.8, and just divide it by 0.1. All right? And what that's going to do is that's going to give you 72 ticks. So every tick on Nadex per spread is going to be worth $1. So it'd be $72 per spread. So if you bought, let's say, 5 spreads, and you made 72 ticks per spread, then it'd be 72 times 5. So the big thing is just make sure you minus where you get your profit from your entry price on a buy, or basically your entry price from your exit price on a sell, and the difference there will be your profit, and then you just got to calculate that into what does that mean in dollars and cents.
Okay.
Does that help?
That's been contrasted to the binaries. The binaries essentially.
I was talking about the spreads. You're talking about the binaries or the spreads?
I'm just making a contrast.
Okay.
I'm thinking I shouldn't have mentioned that. I'm thinking inside of my own thoughts here, but the contrast is very different. In the binaries, as long as it's in the box, you have essentially 100% profit. In the spreads, it's totally different. It's according to the buy and the sell.
Right, the spreads have the box, so it's a box spread, and so it's basically the spread is just like an underlying market in the sense of where you buy, where do you sell, the difference is your profit or loss. Okay,
Right.
If it expires at the exact same price that you bought it at, so if you bought it at $13.97.4, let's say it expires at $13.97.4, then you're break even, less any fees or whatever, but you're break even as far as your P&L on the movement of the underlying market. A binary, completely different. Binary is a true-false statement. Okay. So on a binary, if it says the market will be greater than 14.05 at 4.15, and use true means buy, okay? So buy and true are like equal statements. So if you say true and you hit buy, then it has to be above that at expiration. If it is, whatever your risk was, and you take that less $100, okay, that'll be your profit. So if your risk was $15, then your profit will be $85 if the statement is true at expiration. All right?
Right.
And then, now you don't have to wait till expiration. So you can exit anytime you want to. Now, as far as knowing exactly what price the binary is going to be at a certain price level, that's going to be pretty, you can do it, but it's pretty difficult. You're going in and you're doing a lot of math, very long formulas to calculate binaries, because you're factoring in not only movement in price, but you're also calculating in time to expiration, and there's probability. There's a lot of different factors tied into binaries. What you usually do is what I like to do, the easiest way for me, is to say, okay, absent of time, and absent of time, what you're going to do is you're going to look at and you're going to go, okay, look at the indice binary. So if you're in the Nadex platform, look at the indice binaries, pull up, say, the US 500 on the binaries, look at the easiest one to say is what are the dailies, okay? Right. And you can use basically the option chain, you could call it. And you could scan up and down and see, okay, if it moves, 3 points, what would that be worth? And so, if you bought it for 11 and it moved 3 points up, then actually you go down if you're going up, because basically that means it's 3 points closer to you now. Okay, so then you'd be selling it at 20, so you'd make $9. If it moved up 6 points, it'd be at like $35, $36. So you can use that option chain. Now again, that chain is going to be very accurate outside of time. As time passes, okay, then obviously it's going to be less and less probable it's going to move that far. At the same time, as time passes, it's going to move a lot faster. What's that?
What time of the day could I get into this spread, this box, the US 500? Is it available early in the morning, like you said before? Is it available at 6 a.m.? What time would this be available to enter this spread?
It depends on what spread you're trading. Spreads start trading, even on the US 500, as early as 6 p.m. So as early as 6 o'clock, you can get into like a daily spread. So, and then there'll be another one. You'll have the one that expires. There's a shorter one that's a longer time frame, the 8 to 4:15. That one, of course, starts at 8 Eastern time, and so you can get in at 7, Central or whatever time zone you're in, and you can get in on that at as early as 8 Eastern, and it'd go all the way to 4:15 Eastern. And then they'll also, after that, they'll have ones that actually come out every hour that are 2 hours long.
Okay, and just one other question. I noticed you're sponsored by Thinkorswim. Do you have a relationship with Tasty Trade in Sosnoff?
I'm not sponsored by them personally. TFNN, I know they do some stuff with them. I don't know about the relationship, but definitely you could ask them on it. I know they have a sponsorship because they actually they help out with some of the shows on here, and one of their reps.
Because, I've actually asked them about your products, and they seem extremely uneducated. I mean, it would be great if you could educate them because it seems that they're turning customers away from your product.
Yeah, Thinkorswim is a broker. Well, really, TD Ameritrade is a broker. They own the Thinkorswim platform now.
No, I'm not talking about Thinkorswim. I'm talking about the founder of Thinkorswim, Tasty.
You're talking Tom Sosnoff. Yeah, I know Tom Sosnoff. Uh-huh.
Right. Well, they seem to be turning customers away from your product.
Okay, I can't answer on that one. I'd definitely like to. I'll follow up with you on that. But now, my product is really just the education on Nadex. But you mean turning people away from Nadex?
Yes, from Nadex. I mean, in terms of hedging strategies, I mean, to me, it seems a wonderful hedging or different opportunities.
Okay, it's a great hedging strategy for day traders.
But it seems that it seems they're totally uneducated, and I don't know whether they want their customers or to trade exclusively with Thinkorswim, but they seem to be turning people away from the binaries in Nadex.
So I haven't heard any of that. I'll follow up with you on it, though. But yeah, if you'll send me an email, I'll definitely follow up with you. A lot of people honestly just don't know. And actually, now as far as them, I don't know, but any FCM that actually does want to join Nadex, they can contact Nadex, and they can actually offer the products, and so they can participate in that market as a FCM, as a broker. So they just got to get a hold of Nadex, and they'll connect them with the right people over there. But a lot of it people just don't know, and binaries have had a bad rep. And they're very common, honestly, international. They're very new to the U.S., okay? And the problem is, everywhere else, literally everywhere else, they are not exchange regulated. Only in the U.S. on the Nadex exchange can you actually trade binaries. And it's really funny when you go over and you look at some of them, because, I mean, they're literally like 10-minute binaries. Every 10 minutes there's another binary, okay? And they also pay like an 80% best case scenario. So let's say you're saying, hey, it's going to be above this price in 10 minutes. Then the most they'll pay you out on a lot of them are like 80%. So if you're right, you make 80%. If you're long, you lose 100. So if you put $100 up to place a trade, they'll pay you, your $100 back plus 80. If you're wrong, they'll take 80. And that's how a lot of the binaries work, overseas and the over the counter. And Nadex, I mean, at the money, okay, just a 50-50 chance, like where the market is right now. I mean, you're basically looking at a 50-50, basically 100% payout. Okay, $50 for $50. Whereas you go over, and I mean, you can even look at some of these. I mean, now this would be just, a huge move. But, if you had to move like up to like even 1405 by the end of the day, I mean, you have a tremendously massive payout, $95 on 450. So obviously a lot more than 80%. So, I mean, if we do the math on that, it's huge. Let's see, I'll show you exactly. And they had to do a lot of these changes just to get everything approved. So yeah, basically 2,100% payout versus an 80% payout. So if you put it 450 and you made 95.50 on that trade, and there are times when I bought really cheap ones, I made quite a bit just because I was expecting a big move from an announcement overnight and things like that. That's about the only time I'll really play with those. But yeah, they're definitely a lot different. Most people don't understand binaries. They don't understand how Nadex binaries are different than the over-the-counter binaries that are so common out in the market. And so as people basically, they shy away from what they're scared of, what they don't understand. Also, the way that people trade binaries, they trade them often, honestly, incorrectly, okay? And they go in and they treat them like gambling. They treat them like a slot machine. And they go in and they buy literally these $2 binaries or maybe even these $4.50 binaries. And they have no idea what they're doing. So, I mean, and that's, just, name your futures or option strategy. You have people doing the exact same thing. There's just a lot more education out there in the U.S. because those have been around a lot longer in the U.S. But with binaries, you have to go in and you need to have a plan. It's not just put it on and go for the maximum profit. And a lot of people have that assumption. It's sort of funny. When you first get into options, a lot of people think that they have to wait until the option expires before they can get out. They're not looking at getting in and getting out sooner. And that's funny to any of us who have traded options for any time. But a lot of new people, they're like, oh, well, most expire out of the money and this and that, whatever. It's like, well, there's a lot of reasons people want them to expire, And so it's understanding the strategies, knowing what you're doing with them. And, like some of the things I show is like looking at standard deviation levels and picking that as a point where you buy or sell. If you do get into, like, let's say you did decide to buy the 1402 on the S&P, would I be waiting for it to make, literally, $95 to, profit. No, I would not wait all the way till it got all the way up there and expired, because I could easily just be giving all that money away. So if I thought the market was, about to move up, like it's sort of trending up right now a little bit, obviously for the day, and if I thought it was going to be moving up, then what I may do is go in and buy this, and if I think there's a 3-point move possible, then my target may be literally $8. Well, you know what? If I can get in for, $4 or $5, I can get out for, $8 or $10, I doubled my money. And I can do, 5, 10, 20 of them. I can do whatever I want to do. And if I can, do that more often than not, then, of course, that's a great trade. If I can at least double my money when I win. Obviously I want to make more than that. I'd like it to move like 6 points so I can get maybe like 4 times my amount of money. So that way, I start getting ahead on a 50-50, after cost. But, like I said, the biggest mistake people make on binaries is they buy them and they're going for that lottery ticket. Man, I want to go in and put $2 down and I want to make 98. And so I'm going to go put, $100 in. I'm going to put $200 up. And, if you literally do that and you go in, the payout is so attractive. Okay, you put up $200. If the S&P closed above 1408 by 415 today, then you'll make $9,800. So you can see why people do it. They see those big numbers.
I like the way you combine it with leader regression and charts in probabilities of, the volatility. It adds a lot of sense to it. It also, I want to mention, I noticed like Don Kaufman has appeared on TFNN. Are you familiar with Don Kaufman and his swim lessons programs?
I've met him a couple times. I'm sure, I know obviously everybody knows that he's a great guy. I don't know how much he knows me yet, so we'll get to know each other more just with TFNN and everything going on. But I am familiar with Don. Yeah.
Yeah, I love to see you promoted on like their swim lessons and Tasty Trade, because it seems like so many things that they do take traders in the wrong direction, but could be complemented by what you have to offer. In terms of, so many different strategies they seem to offer, but there's no hedging that seems logical, in terms of their technique. Or it's very limited hedging. It's sort of like, you're talking about a lottery. You can play the markets as a lottery and with lower risk, but still you're going to lose your investment, like vertical spreads, et cetera. If you're in the wrong direction, you're going to lose all your investment anyway. So, what difference does it make if you lose, $2 or $2,000 if it's not hedged? If you don't have a strategy for hedging, you're still making a stupid move.
Okay, I'm on. All right, sorry about that, folks. We had some sort of weird network issue there. And so, again, apologize for that. But let's go ahead and I'll keep going and pick back up where we left off. I don't know what happened there. Is Paul still there? All right. We'll keep on going. So what happened was, with Paul was bringing up some great points. A lot of people just don't understand what the Nadex products are. And they compare them with products that things they may have heard. Okay? So one of them is binaries. The other one is the box spreads. Now understand, the box spreads are not available anywhere. And so, go ahead and hold it right back there. I'm going to let you know. We're really going to go into the differences between the two, and we'll be right back after the commercial break. Okay?
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, everybody, welcome back to the Diagnostic Trading Hour. And just wrapping up here, we had a little interruption in the network there, but we got it resolved fast for you. And Paul had some good questions he was bringing up. Just wanted to know, like, some people are steering people clear of binaries and all that stuff, and you know what? That's okay. But you always make sure the person understands the product. Do they understand the payouts? Do they understand the statistics? Do they understand how to trade them? They understand that you don't need to hold them till expiration. Okay? And binaries, even on my own, whenever I'm talking to traders, I really push people closer to the spreads than I do the binaries. The binaries they're the simplest product, but they're also, in my opinion, sometimes the most complicated product to trade. Because you're using standard deviations and you're using probabilities. And the biggest mistake, again, people make on the binaries is they see cheap binary, big payout, that's what I'm going to do. And they don't understand that they're basically saying, you know what, that means that the cheaper that binary is, the lower the probability it is that it's going to profit because it's so far away from where the market is at. And so, don't be looking for the big bets. Looking for, trades to make money, okay? With a plan. Where am I going to get in? Where am I going to get out? Not, hey, I'm going to get in and hold this thing and just hope it happens. Don't let that greed take over. Greed not only can cost you money, okay, by, like not having stops, but you don't have to worry about that in Nadex, which is cool because all of your trades are completely defined, okay? But also, greed can cost you money just by taking trades that don't make any sense. You have no reason to do it except for you want the money. And when your trades are based on simply wanting to make money versus trading on wanting to trade well, trading on what the charts are telling you, trading on the probability of it getting there, and having a reason for thinking it'll get there besides how much money it'll make you, then if you're doing it that way, if you're doing it based on money, then that's completely wrong. And you got to start with risk management. Then you have to have reasons for actually taking directions. What is the market telling you? And then put in profit management. Profit is the last thing you consider. Not that you don't consider it. You do consider it before you place your trade. You want to make sure your risk reward is acceptable. But your profit cannot be your first consideration or even your second consideration. Your first is risk. Your second is just probability. Okay? So, again, it doesn't matter how low your risk is. If your probability is, impossible, it doesn't matter. Like, oh, yeah, your risk is $1 in a lottery ticket, but come on. You really think you're going to win. Okay? So don't buy lottery tickets. Trade. Trade to trade well. And, if you do that, it's amazing how it can work. When we even used the binary last week, we did a euro-dollar trade. And we went in and we shorted the euro-dollar, and that was on Friday. And but to hedge it off, we put a little bit of extra money in a few binaries just in case we wouldn't take maximum loss. Well, you know what? The euro-dollar shot up. And we had that binary trade on, and it covered all of our cost and then some. And so we used that binary trade just to hedge our spread trade. You could do the same thing, with the Forex. So, stay tuned this week. We're going to go a lot into how to hedge, whether it be with binaries or with spreads, with your underlying markets. So they don't have to be trades all in of themselves, but once you get used to trading with them, you're not going to want to trade without them. And you'll see what I mean as I show you how to lower your cost and maximize your leverage and, really minimize your risk. So I hope you all have a great day, great trading day, and I will see you tomorrow. Same time, same channel, TFNN.com, TFNN.mobi.